I have had a ton of interest and more questions from veterans and active duty service members wanting to learn more about how to truly leverage the VA home loan to its maximum potential. And that was through a conversation that I had posted a while back about how to use the VA loan to purchase an investment property. So there is a loophole around it, and it is absolutely possible to do so. VA loan was originally designed and created for veterans and service members to be able to purchase a home when they came back from deployment and to raise their family, live the American dream. So the VA loan still today requires that if a veteran or an active duty service member uses that benefit to purchase a home, they have to live in it. So it has to be a primary occupancy for that property. You have to live in the home. You can't get around it. But here is how you can use the VA loan to purchase an investment property. Starting with the fact that VA loans can be used to purchase multi-unit properties. So an example is a duplex or a quadplex. There's going to be more than one unit in that property, which allows the veteran or the active duty service member to occupy one of those units in that multi-unit property. In order to purchase an investment property, multi-units, duplex, quadplex, the veteran or active duty service member is going to have to occupy one of those units. The other 3 units can be rented out if they're not already being rented out when the active duty service member or the veteran purchases that strategy. Here would be that if you're eligible for the VA loan, you find a multi-unit property that you are eligible to purchase financially. You've got your certificate of eligibility. You would have to qualify to purchase the entire property. So if it's a duplex and it costs $400,000 for the duplex, even though one unit is being rented out, you cannot use the rental income for that other unit to qualify to buy it. You've got to be able to financially qualify to purchase both units, and you live in one of those units. You purchase the multi-unit property and you occupy one of the units, live in it for at least a year. And then at that point, you can move out. You can rent that unit that you were living in. Now you have 2 investment properties. It's one real estate piece of property, but it's 2 different units that you're renting out. And then you can move on, and you may have VA entitlement remaining. It's also referred to as second-tier entitlement to go and buy another duplex. Again, you occupy one unit and rent out the other unit. Do that for a year or a few years of doing this. You should have enough equity in that very first property that you purchased from it appreciating to where you could refinance that property from a VA loan to a conventional loan. And now you just freed up more VA entitlement to do it all over again. And if you do that, now at that point, you're going to have 3 properties. And if each of those properties were duplexes, guess what? You have 6 total units that you could be renting out. You can do this for as long as you like, as many times as you like. About it is you didn't have to make a down payment on any purchase of any of those investment properties, and no private mortgage insurance. Couldn't get any better. It actually does, because if you're a veteran with a VA service-connected disability rating of at least a 10%, then you're not going to have any VA funding fee. So here you are, you're able to buy an investment property multiple times, potentially 2 different investment properties with a VA loan without any down payment, no private mortgage insurance, and no VA funding fee. And in addition to that, if you're in a state that grants a 100% real estate property tax exemption to veterans that are 100% VA service-connected disability, a couple of those states would be Texas, Florida. I'm telling you guys, if you're eligible for the VA home loan benefit, you want to leverage it, use it over and over again. I think I've used mine personally 11 or 12 times over the last 20 plus years. It's not a one and done. You can use it as many times as you want. And again, if you have a VA service-connected disability rating of at least 10%, you're going to be exempt from the VA funding fee. If you do have a VA funding fee, it's rolled into the loan. It's a percentage depending on if you make a down payment or not. You still don't have to make a down payment. Me for details, or go to terryroberts.com. I would be happy to help out and give more explanation on exactly how this works for the VA home loan benefit.